Hello, thank you for tuning in. In this video, we'll be talking about the statement of cash flows. So we've been talking about in the past few videos about other financial statements. So in this video, we'll be covering the topic of the statement of cash flows, which can be found in the annual report of any company's filings. So let us start by writing down a fictitious company called ABC Corp. And let us specify what kind of financial statement we are going to make. So it's called the statement of cash flows. So this statement helps us to figure out the cash inflows and outflows in the company. And let us now write the year ended December 31. So this tells us that the statement of cash flows shows the previous fiscal year's activities, the cash flows that has occurred in the past year, and we have documented that, and now we're going to present that in the annual report. So let us start by writing down operating activities. So under operating activities, we will figure out the inflows and outflows. So let us figure out that for year 2018. But I'm just writing down 2017 and so on because that will be present in the actual paper that we'll be seeing in a short while. So let us start with the net income. So the net income is brought to us from the the income statement. So from the income statement, we gather the value of $30 million worth of net income. Now from that, we take depreciation and amortization. So what is depreciation? So if you buy any equipment or building, with time, they will degrade. And you can actually write off those value as losses. And the same thing is for amortization. You can write off the value, but those are not for actual physical stuff. Let's write down $5 million. So we have, those are not actual cash outflows, so therefore we are just adding them back into our calculations, right? We have only shown them as loss in our income statement because it reduces our tax, but in actuality, the cash has not left the corporation's bank account. So that's why we add the 5 million back onto the statement of cash flows. Okay, cool. So what is next? So next we have the cash effect. The cash effect of the changes in accounts receivable. So let's see, what are the changes in accounts receivable? So account receivables are the money that we are supposed to be receiving and we have not received yet. So there is no cash inflow, but the cash has gone. So it is -2. Accounts payable is that we're supposed to pay someone, but the cash is still in our bank account, so we have added one back. And finally, we have the inventory. The inventory is basically all the stuff you have paid for and you have bought it, but you have not sold it yet. So that is why we put -2. Okay, so let us see the cash from operating expenses. So we're going to add everything together, and now we're going to total them. Okay, so let us figure out what the total cash from operating activities is. So 30. Okay, now that is 32. So that is the cash from operating activities is 32. Cool, right? So we'll be next looking at something called the investing activity. So there's basically the cash statement of cash flows is divided up into 3 parts. One, operating activities. The second one is investment activities. So under the investment activities, we only have one for this company called the capital expenditures. So what is capital expenditure? Capital expenditure is the money spent on like acquiring assets, fixed assets like manufacturing plants, real estate properties, and other equipment. So the cash or the money that is spent on that, it is called the capital expenditure. So the money has left the account, cash outflow, therefore we have put a minus in there. So now let us total that up and say cash from investing activities has been a negative. Sometimes investing activities could bring us a positive cash flow if you have actually invested in certain companies, like certain stocks or bonds. For now, let us just keep it simple, and we can just say cash from investing activities has been a negative. Okay. So let us just draw a line. Sometimes if we don't have space, we just go to the other side. If the paper is on, if there is an actual paper, it goes to the next paper. In online, they just make it long, lengthy papers. Okay, so the final part is called the financing activities. All the activities that has been related to financing. So let us see how the cash has been flowing in this part of the statement. So first we have dividends paid. So let's see how much for the year 2018 and 2017. For the year 2018, we have minus 1 million. So that is how much cash we paid out and dividends. So that's why it's a minus. And sale or purchase. So we have sale or purchase of stock. So sometimes corporations buy back stock, so they spend money on that. So let's assume we have bought back some stock, and that has the money has left our account, so it is minus 5 million. So we spend money on buying stock. And let us also include the increase in short-term debt. So the increase in short-term debt means your borrowed money. So the money is in our bank account, so it's a positive too for us. And increase in long-term debt is the same case, is going to be a positive number. And in our case, let us just put $10 million. Cool. Okay, so let us just calculate the total for all of this. The total is going to be around 6 million. Okay, that seems right. Okay, so what we're going to do now, this is the end of the line. Now what we're going to do is change in cash and cash equivalents. So we're going to just add every single thing that we have got to this point, especially the final numbers from each of the three compartments. Let us add 32, then minus 20, then plus 6. And finally, we get 18. Awesome. So let us go to the suc.gau's website to check on a statement of cash flows. We're going on to the 10K and visiting the 10K. So let us find where it is. Balance sheet. Cool. Now cash flows, yes, that's what we're looking for, cash flows. Okay, so operating activities, we have also operating activities, and yes, it shows the final line. Cool. Investing activities, the second part, and they have put the final line over there. See, they have a little bit more. And we have financing activities. And there's, okay, we forgot to put in the cash used in financing activities, the total. So we can write that. So let us write down the cash that we have got from the financing activities. Okay, that has been a very good video. Cool. So that is the basics. Okay, so as well, it shows the changes in cash and cash equivalents. That is the final line. So thank you for watching this video. If you really liked the real world example, please feel free to subscribe and check out the website. Thank you.